Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal. It's the 13th of December 2023 and here are the questions we will be answering today. Why is Coca Cola eyeing the alcobev market? What was the significance of Article 370? Why are thematic funds gaining traction? And Epic's antitrust win against Google explained. 4 years after launching Lemon-Dou in Japan, Coca Cola is all set to test the ready-to-drink alcoholic beverage market in India with the same cocktail. In the beginning, the company is testing the waters in 2 states. So what does Coca Cola's entry into India's alcohol market mean? Kasturi Akhil takes a look.
The largest producer of soft drinks in the world and the most common beverage in Indian household is set to enter the domestic alcohol market. We are talking of Coca Cola's ready-to-drink alcoholic beverage Lemon-Dou. The company has flagged off pilot tests of Lemon-Dou in Goa and Maharashtra for now. Lemon-Dou is Coca Cola's first lemon sour brand, which is a mix of distilled liquid similar to brandy or vodka and lime. According to media reports, its preparation and distribution would be carried out in independent facilities separate from those dedicated for non-alcoholic ready-to-drink beverages in India. India, along with Philippines, drove significant growth in the beverage company's unit case volumetric growth in the July-September quarter among emerging markets. According to the International Spirits and Wines Association of India, India's alcoholic beverage market is projected to hit $64 billion in the next 5 years, making it the 5th largest contributor to global market revenues. As the 5th largest market for Coca-Cola and the 3rd largest for alcoholic beverages worldwide, what does the company's foray into India's alcoholic beverage market mean?
So I think if you look at the beverage market in India, specifically around the alcohol beverage and the pre-mix side, in terms of volume, the growth rate is in the range of about 5 to 7 odd percent, with beer volumes growing at about 7 to 8%, and whiskey volumes growing at about 5%. So definitely the opportunity here is very large, and specifically both beer and whiskey have got segments under them, which is the premium segment, premium portfolio, as you call it. And therein, the growth rates are anywhere in the range of 10 to 25%. So there is a very big market opportunity out here in terms of volume growth, and maybe that is the reason why Coca-Cola is entering this pre-mixed beverage market.
A study by market research company Euromonitor International found that India's growth in the carbonated drinks market has bounced back from the post-pandemic lull. The study suggests that one of the strategies adopted by industry players to restore consumption to pre-pandemic levels was focusing more on small-sized packs to improve out-of-home consumption, subsequently driving sales in India. Experts suggest Coca Cola's entry into the ready-to-drink alcohol market is an indication of the company aiming to tap the growing market for ready-to-drink or RTD alcoholic beverages in the country. The consumption of RTD beverages surged during the pandemic when consumers were exploring at-home cocktails in the absence of bar visits. Besides convenience, factors like diverse flavors and growing health consciousness contribute to RTD drink popularity. With lower alcohol content, RTD alcoholic beverages promote moderate consumption, reducing the risk of overindulgence among young adults.
The ready-to-drink kind of a mixed space is really the lighter space of the alcohol market. To an extent, it can be compared to the beer market, to the market of wine, and certainly, RTD drinks of every kind, of every flavor, rule the roost in many countries, many economies. Rum is considered to be a starter drink for young people most of the time because rum and coke is a traditional mix across countries. And why rum and coke? Because the coke sweetens the rum, and the rum gives the kick to the coke. So rum and coke is possibly the first, at-home RTD drink which came by. And now what Coke is doing is, hey, if I'm being used so much by rum, why don't I, maybe have an avatar of my own? And that's what they've done globally, and they're entering the Indian market as well with it.
While it's the first time in India, the Coca Cola company is already serving various markets globally in this segment, like China, Brazil, Japan, Mexico, and the United States. Lemon-Dou, particularly, was first launched in Japan, in the island called Kyushu in 2018, where the cumulative sales volume of the drink saw a growth of over 10 million cases over the course of 2 years. Experts point out that whenever Coca Cola has ventured into a new category, it leverages its powerful brand value to maximize its market penetration, like in the case of Costa Coffee. This time, with Lemon-Dou, the company aspires to do the same.
Clearly, there will be more than just fizz, as Coca-Cola is a household name. Moving on, the Supreme Court has upheld the abrogation of special status of Jammu and Kashmir. The Apex Court said that Article 370 of the Constitution was a temporary provision which was meant to serve a transitional purpose. So what was the significance of Article 370? Abhijit Kumar brings you the answer. Over 4 years after a presidential order scrapped the special status granted to Jammu and Kashmir, the Supreme Court on December 11th upheld the decision, holding that Article 370 was a temporary arrangement due to war conditions. But the court said that statehood of Jammu and Kashmir should be restored as soon as possible and also told the Election Commission to conduct polls in the Hill State before September 30th, 2024. The verdict was delivered by a 5-judge constitution bench led by Chief Justice of India D.Y. Chandrachud and comprising Justices S.K. Kaul, Sanjeev Khanna, B.R. Gawai and Surya Kant. It also held the creation of the Union Territory of Ladakh as valid. Article 370 of the Constitution granted special status to the state of Jammu and Kashmir, allowing it to have its own constitution, flag, and autonomy over internal administration. The Maharaja of Jammu and Kashmir, Hari Singh, had signed the Instrument of Accession in 1947, allowing the princely state to accede to the newly formed Indian Union. Article 370 limited the Indian Parliament's power to make laws for the state, except in defence, foreign affairs, finance and communications. The provision also allowed Jammu and Kashmir to make its own rules relating to permanent residency, ownership of property and fundamental rights.
Article 370 was said to be a tunnel through which our first Deputy Prime Minister Guljari Lal Nanda had told the Parliament much traffic has gone and much more will go. It was said to be an empty shell because almost the entire Indian constitution was extended already to the state of Jammu and Kashmir through Article 370, and the Supreme Court has now accepted that the integration of Kashmir with Republic of India was complete by Article 3 of the J&K Constitution. Because J&K Constitution itself had said that Kashmir is an integral part of India and this provision of their constitution cannot be amended.
Article 370 was seen as a bridge to facilitate the integration of the region with the rest of the country while respecting its unique cultural and historical context. But questions were being raised about the special powers of the state. Critics argued that it impeded full integration and development of the region, while proponents saw it as a necessary safeguard for the distinct identity of Jammu and Kashmir. So how will the abrogation of Article 370 affect the stakeholders?
It was some kind of a sentimental thing that we have some special status. And for the rest of India, there was this feeling emerging as a conscience of a large majority of people that why in a country like us where we should have one nation, one constitution, you are having ek desh do vidhan. So on ground, in terms of law, Kashmiris have not lost something very big. And I believe that the government of India's powers, in fact, have got, once state comes into being and it is restored, it will become a state like any other state in India. And the union will not have the same kind of wide powers in respect of Kashmir, which it had through 370.
And was Article 370 a permanent measure? Why was it contentious?
Constitutional Assembly is no more in place, to say that now Article 370 is permanent, which was devised as a temporary measure, would not be correct. And thereafter, other issues which came that because of the Article 370 was the difference which was created between the citizens also. I will not say merely the states and the center. Even for the citizens, the difference created, for example, your right to state, your right to property, your right to citizenship, a lot of things came into picture. I mean, the Kashmiri residents were not even fundamental rights were given or not given was a question, because they had a separate constitution altogether. They were saying that they could not have done so because the Constituent Assembly consent was required and there was no Constituent Assembly, so they could not have done so. So they were questioning the process. And on that, the Honorable Supreme Court held that the exercise of power by the president was not illegal. And so therefore the constitutional orders 272 and 273, which abrogated Article 370, were held by the court to be valid.
But some experts believe that the special status of Jammu and Kashmir had seen gradual erosion over the years, before it was completely scrapped in 2019. In 1986, the President had extended Article 249 of the Constitution to Kashmir through Article 370. It empowered Parliament to legislate even on a matter in the state list on the strength of a Rajya Sabha resolution. In the epilogue of his judgment, Justice Sanjay Kishan Kaul, who belongs from Jammu and Kashmir, recommended establishing a Truth and Reconciliation Commission to probe and report on the violation of human rights perpetrated by both state and non-state actors in the state since the 1980s. Justice Kaul said that it's important for the wounds to heal and recommend measures for reconciliation. Elections in J&K are likely to be held close to the general elections next year. Let's now turn our gaze to financial markets. Among equity mutual funds, the small cap category is in the lead with the highest net inflows this year. But right behind it are thematic or sectoral funds, which have emerged as the other popular choice. In our next report, Harshita Singh tells what is driving traction in these funds and the approach investors should take.
Beyond the obvious mid and small cap mutual fund winners this year, thematic funds have emerged as the other popular choice. Data shows thematic equity mutual funds have amassed 24,836 crore rupees till November this year, higher than the mid-cap category, which saw inflows of 21,521 crore rupees. Thematic inflows are only second to the small-cap flows, while the large-cap category has witnessed only outflows on a net basis. The robust inflows in thematic funds have largely been mobilized from a record number of new fund offers or NFOs this year. So far in 2023, the mutual fund industry has floated 25 thematic NFOs as against just 8 in the same period last year. Thematic funds invest in stocks tied to a particular theme or sector and are high risk in nature. But investors have continued to pour into them for higher returns in a year marred with volatility.
The basic fact is that in many diversified portfolios, basically you get exposure to some of these sectors, but in a very limited way. That too, generally these exposure in large diversified funds are restricted to maybe large cap stocks. But when we talk about these sectoral funds or thematic funds, here maybe the investor is taking basically a large exposure, maybe 80-90% or even 100% exposure to this sector, wherein the fund manager is also investing in not just large cap but in small and mid cap stocks as well, maybe where the value discovery takes place.
Notably, cyclical opportunities have led to an outperformance of several thematic funds in recent years. Large cap funds on an average have generated 17% returns in the last 3 years. Mid caps have given 27% returns and small cap funds gave 33%. In contrast, PSU and infrastructure funds have outspaced them with 37% and 33% gains, respectively. Analysts, however, suggest avoiding looking only at past performance. Rather, knowing the right time to enter and exit depending on the cyclical nature is more crucial, and one should evaluate the business cycle from an 18 to 24-month perspective, they say.
I think a mistake that one should avoid in thematic funds is really looking at recent performance of funds and thereby looking at investing into it. Thematic funds which has been very popular in the last couple of years, basis past performance, one should really take stock on whether they should continue to look at it. But if it is some new theme where the market setup has changed due to which some opportunities are arising, that makes a lot of sense to look at. So anything which is return based, which is gaining popularity, investors need to get a little cautious, and something which is based on what kind of opportunities are opening up in the future, perhaps merits consideration.
Sachin Trivedi of UTI AMC, meanwhile, believes exposure to sectoral funds should not exceed 10% to 20% of one's overall portfolio. Diversified categories like large caps and flexi caps should have the largest share for healthy long-term returns, he says. Today, on 13th December, markets will react to November inflation data released in India and the US yesterday.
He's making plans for an early retirement. Business Standard.
Shares of Alphabet, the parent company of Google, crashed by about 10% after the company lost an antitrust battle with Epic Games this week. A federal court jury observed that Google's mobile app store maintains a monopoly in the Android app distribution and payments market. Raghav Agarwal has more on it. Epic Games is an American video games and software development company based out of North Carolina. It has made several famous video games including Valorant, Grand Theft Auto, and Unreal, but it is most widely known for its game Fortnite. Epic's Fortnite is a free-to-play game which makes money by selling in-game items with its virtual currency V-Bucks. However, Epic Games alleged that when a player makes an in-game purchase, it triggers an in-app fee to Google as well as Apple. Critics call it Google tax and Apple tax. In 2020, Epic deployed an update to the game which allowed the players to purchase V-Bucks directly through its own payment processing mechanism. Players were also given discounts for purchasing via Epic's mechanism. Epic wanted to devise an alternative billing mechanism that bypassed Play's billing regime, to which Google had raised objections. Later, Google and Apple removed the Fortnite app from their respective app stores. The company moved against Apple for alleged unfair monopolization of the mobile app space. However, a California court ruled in favor of Apple and ordered Epic to pay damages for violating its developer agreement with Fortnite. The case is currently in the US Supreme Court. Epic Games moved to another federal court in the US against Google, claiming that the tech major makes it difficult for developers and users to get around its Android app store. It alleged that the app store's fees have created an illegal monopoly which gives more money to Google and drives up app prices as other stores cannot compete. It said that Google makes it difficult to make payments on its Google Play App Store from any other source other than Google Play Payments platform. In fact, Epic's CEO, Tim Sweeney, in a post on social media platform X, suggested that there should not be any Google fee at all. The judgment is important as it may encourage other developers to move against Google for charging the Google tax. Google, however, believes it will compromise the basic protections against side-loaded apps and damage Google's ability to compete against Apple. Earlier this year, the Competition Commission of India, or CCI, imposed a penalty of 1,338 crore rupees on Google for antitrust violations. CCI said Google abused its dominant position in the Android ecosystem. CCI held that mandating pre-installation of the Google Mobile Suite, which includes Google Search, Chrome browser, YouTube, Google Maps, and Gmail, amounted to imposing unfair conditions on OEMs, which is an abuse of dominant position by the company. The National Company Law Tribunal, or NCLT, later upheld the fine but said that Google may not remove pre-installed apps like Google Maps, Gmail, or YouTube from the mobiles. Moreover, NCLT allowed Google to not host third-party apps on its App Store.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Well, both the parties, that is CCI and Google, have moved to the Supreme Court, and the case is likely to be heard in January next year. Well, that's all we have for you today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.